Hi everyone, good evening, good morning, good afternoon, whichever time you are hearing this video. So this is a revision video of paper number F8 Audit and Assurance, chapter number 12 Audit Reporting. So there is a doubt for all the students who are studying this Kaplan material that there is a lot of content, that what points to concentrate upon, which topics to concentrate upon, which paragraphs or which points or which data has to be read by you so that you can prepare for the exam by using the same material without changing the number of materials. So I would recommend that follow only one material, but just have a knowledge that what topics, what points should be kept in mind from that particular material should be always there with you. See, here you can see audit reporting. We are going to do a revision of the chapter called as audit reporting. So in this audit reporting, you just feel the topics, feel the concepts that would help you in understanding in a better way, right? Rather than just by hearting it, you just try to feel it. So feel it means what? Feel it means what to do. See, audit and assurance is such a topic that always you should step into the shoes of a person who is conducting the audits, who is verifying the financial statements, who is preparing the audit reports, and then from that perspective, you need to remember these concepts. Matlab, you need to assume yourself as auditors while you are reading this audit reporting chapter as well as other chapters of this audit and assurance. Now, as I told you that I will be telling that which points to concentrate upon and what pages to study and what pages you can skip for studying. Okay. And as I said that this is a revision video. See, first and foremost, let us develop the context. So let us first develop the context in which this chapter has to be studied and this chapter has to be remembered. Okay. See, the name itself suggests that it is audit reporting. Audit reporting. So by reading this word itself, you should get a essence that there is some person who is verifying the financial statements and he is having an obligation, or what we can say, he is having a responsibility to give an opinion on financial statements, and that opinion is given at the end of an activity, isn't it? So initially whenever you start the audit, you can't give a report, isn't it? Why? Because if you do that, then you are a very good auditor. You should not do that, it is illegal and you will be punishable. Never ever do that. I'm just kidding. So audit reporting should be done at the end. Now why a person need to do reporting? See, reporting is not auditing is not done for the person who is conducting it. Audit is done for the outsiders, right? As you would have already learned that shareholders of the company or the members of the company would be appointing the auditors of the company, and who will conduct the audit on behalf of the shareholders or the members, and then they give a report, which means auditors are conducting the audit not for themselves, right? So if they are conducting from themselves, they know what has happened in the financial statement, so they can keep that in the mind. Moreover, this is not done as a part of personal interest. It is done as per the interest of the shareholders. So whenever the shareholders or the members have appointed the auditors, and auditors are verifying the financial statements, and after that they forming opinion, and this opinion again has to be given to the members of the company, isn't it? So to give the opinion, do you think that the auditors will call to each and every shareholder and tell, your in financial statements are very nice, it is fantastic, or it is not good, there are some mistakes in the balance sheet, some mistake in the profit and loss account, there are some problems in the disclosure? Do you think that auditor will call everyone, all the shareholders, and tell this information? It is practically not possible, and auditor is not going to do that job, right? So that is the reason why there should be a formal report that is to be prepared. There should be a formal report that should be prepared by whom? Auditors. Auditors. Why? Because they are conducting the audit, and they will be sending this report to the shareholders or the members of the company, right? So this is the context that you should understand in which this audit reporting is made. Now see, audit reporting in simple language, it is nothing but expressing opinion. Expressing opinion, right? Audit reporting is nothing but what? It is expression of the opinion. Now, can you tell the opinion as you want? It is not possible. You can't say the opinion as you want. Why? Because here the conversation is not between you and me one to one, friends or family members, isn't it? It is a formal way of addressing an issue that you have identified in the company's financial statements to the owners or the members of the company, right? So that is the reason why it cannot be done in the format that is specific to the auditor. It should be done as per the formats given by the generally accepted practices, right? So here the generally accepted practices for reporting are what? International auditing standards. International international standards on auditing. So here, which standards are applicable in case of reporting? So as you know that 700 series standards are applicable whenever you are giving the audit report, right? Now let us quickly go through what are the 700 series standards and what does they tell about. And numbers and names you should compulsorily remember. So whenever you are writing in the exam, ensure that you are quoting the standards. Without quoting the standards, see, the content doesn't look good. And another point is you should quote the correct number with the correct standard name. Not the standard name should be correct as well as the number should be correct. If the number is correct and the name is wrong, you lose the marks. Or if the name is correct and the number is wrong, both are same, isn't it? Doesn't make any difference. You are not going to get any marks, my dear. And see, it is compulsory to remember. There is no option. There is no option. There is no option. Sir, I could not remember. Then you do something to remember it. Every day you learn 3 standard names and numbers, 4 standard names and numbers. You revise it, write somewhere. Whatever you can do, you do. But remember, 100% you should remember the standard names and numbers. Not only here in auditing, remember in SBR and FR also you need to remember the accounting standard names and numbers. That should be quoted. That should be quoted. Right. Now what the standards that are dealing with in this chapter is 700. So remember that ISA should compulsorily be there before the number. So 700, forming an opinion and reporting on financial statements. 701, key audit matters. 705, modifications to the independent auditor's report. 706, emphasis of matter paragraph and other matter paragraph in the independent auditor's report. 710, comparative information, corresponding figures and comparative financial statements. And 720, auditors responsibilities about the documents or the documents containing the audited financial statements, right? These are the standards that are applicable for reporting purpose. Okay, now let us go through this chapter and see what standards are applicable and what topics that you should keep in your mind. See, first and foremost, you should remember one point, that what is the auditor's objectives, right? See, auditor is only having two objectives. In which standard it have been told? It has been told under ISA 200. You remembered overall objectives of the independent auditor and conduct of the audit in accordance with standards on auditing. So there the objectives has been already defined, which means auditor is having two major objectives, right? The first objective of the auditor is to what? Form an opinion on the financial statements, right? First you need to form of opinion. So how will you form an opinion? Just by seeing the financial statements, will you say that no, balance sheet is very correct, profit and loss account is very correct, notes beautiful? Will you say like this? See, this is not the way you can form the opinion on financial statement, right? To get this opinion, you should do some evaluation, you should draw some conclusions, right? And these evaluations and conclusions will come from where? From the audit evidence that you have obtained, right? So this is the first objective of the auditor, is that to form an opinion on financial statements based upon the evaluations and the conclusions drawn based upon sufficient appropriate audit evidence. ISA 500 you have remembered, audit evidence standard. There we would have discussed about sufficient and appropriate audit evidence, hai na? So this is the first objective, and the second objective is, as I told you, once you get the once you get the opinion, form the opinion, do you think that you keep inside your mind? No, you need to express it. Okay, these are the two objectives. Once again repeat along with me. What is the first objective? To obtain a reason, to obtain an opinion on financial statement. The second one is expression of opinion. See, these 2 points you should remember at any point of time in your life. Okay, once you are studying audit, you should remember these two. Next, see, we will directly go to the audit report. See here, audit report format has been given, so it is your choice whether to study or not to study. It is only for understanding, okay, not for exams. So in exam they will not ask you to draft a audit report, full-fledged audit report. They are not going to ask you, so you can skip this. You can skip this. But remember, but remember, you should know the contents of audit report. There is no excuse for this. There is no excuse for this. You need not remember this entire report, but you need to know what are the contents of audit report. This is compulsory, my dear. Everyone should remember this. Okay, so you can skip these 2 pages, then you can directly start reading from here. Okay, see, I am telling what to skip and what to study. This is only purely from exam point of view. Okay, purely from exam point of view. Just make a tick mark that what topics you need to study for the exam, and what you can just read once and you can keep aside. So this audit report format you can just read once and you can keep aside, whereas coming to the other topics, wherever I put the star mark, ensure that you know it compulsorily. Right, now let us directly go and see what are the contents of audit report. Right, what are the contents of audit report? Why? Because to prepare audit report, first and foremost you should know what is there in the audit report, है ना? To prepare an audit report, first you should know what should be there in the audit report, so that accordingly you can draft your audit report, है ना? So let us go through this and try to understand one by one. Okay, point number one, title. See, title is nothing but called as the heading of the audit report. Okay, see, auditor and management will be having so many types of certificate exchanges and attestation work. So many things will be there. Now, among the different documents that the auditor gives to the management, or the management gives to the auditor, how to identify it is an audit report? There should be some heading, na? That is the reason why title tells about what? The heading. Okay, and generally the audit reports will be having a common heading called as the independent auditors report. Okay, generally commonly every audit report should have, if it is a statutory audit, internal audit, you can put any name that you want, nobody cares. But once it is a statutory audit, automatically your standards applies. And see, my dear, here I am talking about ISA 700. We have started with the first standard of reporting, 700 series. Okay, so 700 talks about two issues. One is about forming the opinion, second one is about content of audit report. This is the second part. Okay, ISA 700 second part. Okay, just remember the meanings of the side headings, what will be there, so that whenever you read an audit report you can understand that acha, this is the point. Okay, so title of every audit report will be what? Means statutory audit report will be what? It should be the independent auditors report, and it is compulsory. See, you can't write anything that you want. Whatever is there only you should be following as per the standards. The second one is addressee. The second one is addressee. See, addressee is nothing but, see, auditor will be writing the audit report, preparing the audit report, and he will be giving to someone. In that contents, inside that the content should be addressed to someone, isn't it? So addressee is the person to whom the report is addressed, right? So it is the intended users. It is the intended users. In case of statutory audit report, it is the members of company. It is the members of the company. And then comes our next paragraph, which is called as auditor's opinion. Okay, auditor's opinion clearly should tell two things. The first one is they should introduce that we are the auditors of the company, we have been appointed to conduct the audit from so and so year, balance sheet, P&L account. That should be mentioned, and after that they need to mention that in our opinion this is our conclusion, or this is the opinion, isn't it? So this should be explained in the auditor's report very clearly. See here, whenever we are talking about 700, 700 talks about only what? Unmodified report. Unmodified report. Unmodified report. Okay, so in my detailed video, in my detailed class, I would have been explained about modified report and unmodified report. Okay, so unmodified opinion whenever you are giving, then this format has to be changed. So if modifications are there, then what will happen? See, this format has to be studied with another standard called as ISA 705. Okay, combinedly we need to study, but this is the basic structure of the audit report. 700 always gives what? The basic structure of the audit report. Okay, right. So title means the heading of the audit report, addressee means to whom it is addressed, and auditor's opinion means whatever the opinion you formed on the financial statement, that should be given under this auditor's opinion paragraph. And then comes the basis of opinion. See, here in the above paragraph you have given the opinion on financial statements, right? How have you arrived it? What is the basis? Are you just picking from the from the space? No, there should be some basis for your comments. Okay, so tell me, on what basis the auditor will give the auditor's opinion? Nothing that he would have been conducted the audit in accordance with standards on auditing. He would have maintained the ethical requirements which is given by the ACCA Institute, and he would have followed all the audit procedures and the audit the laws and regulations, and he would have obtained sufficient appropriate audit evidence, isn't it? So these are the basis on which this opinion has been given. Okay, next comes to coming to this key audit matters. So key audit matters are introduced with the intention to draw the attention of the users related to some matter, right? We will be speaking about this very detailedly in our ISA 701. Okay, just remember that key audit matters is put inside the audit report to draw the attention, simple language, to highlight something. But in the exam you don't write the word highlight, you should always use the technical jargon that is given in the material only. Okay, don't write anything on your own, try to use these technical words, then it looks very professional. Otherwise it looks like a layman has given a report, which doesn't look good, isn't it? So key audit matters we will discuss in detail whenever we are discussing 701. And just remember that this para is introduced to draw the attention of the users of financial statement. And then comes other information. Other information also we will cover under detail under SA 700 ISA 720. For now, just remember that there is a document in which audit report is there, financial statement is there, there is also some other information, right? The best example would be annual report. So annual report is a very big document in which financial statement, audit report, everything is there, right? So other than financial statements, whenever some other data is there, what will be the auditor's responsibilities about that, how you should report in the auditor's report, that has been said under ISA 720. We'll be discussing that later. Okay, just remember that other information is also a part of the auditor's report. So we completed title, addressee, auditor's opinion, base of opinion, key audit matters, and other information. Next comes a responsibility of the management. Next comes a responsibility of the management. See, you should know that preparation of financial statements is somebody's responsibility. Conducting the audit is some other person's responsibility. Now, if you know that it is enough, no. Shareholders or members also should understand, isn't it? That is the reason why this paragraph is also put in the auditor's report, where it says that, see boss, auditor's responsibilities are something different and management responsibility is something different, right? For example, say preparation of financial statement, it is management responsibility. Shareholders should not misunderstand that auditor also need to prepare the financial statements, na. Actually, it is auditor nothing to do with preparation of financial statements. He has come for what? Verification of financial statements. But shareholders may misunderstand it. So, in the auditor's report itself, management responsibility para is separately mentioned. Okay, and then comes auditor's responsibility. Right, as I told you that there should be a distinction between the management responsibility and auditor's responsibility, right? So what would be the auditor's responsibility? Nothing but planning the audit, conducting the audit, determining the materiality, determining the risk of material misstatement, responding towards the risk, gathering sufficient appropriate audit evidence, forming the conclusions, and then giving the report, isn't it? So these are the responsibilities of the auditor that should be specified under a separate paragraph in the auditor's report. And then comes a report on other legal and regulatory requirements. Now listen, here what happens is, auditor anyway need to conduct the audit, no doubt in that. Why? Because he is appointed to do that. Now whenever he is giving the report, there may be some other laws and regulations, which puts the pressure on the auditor to also verify this and comment on certain extra matters, right? Additional matters. For example, see, Companies Act of UK says that auditors need to also comment on the management remuneration, the managerial remuneration, okay, which means the remuneration which is paid to the directors and key managerial persons of the company. So that the auditor need to comment separately. Now see, this is not mandatory as per the standard, but this information should be commented by the auditor as per the other laws, means laws and regulations that are there in that country. Okay, so if any such type of responsibilities are there, audit report is also giving a space to the auditor. Boss, you can comment here, don't worry. Okay, and then comes our signature. So signature means it is nothing but the official signature of the auditor. Now see, signature is not just putting your autograph, huh? You have a beautiful autograph, you are putting that in the auditor's report. That is not, I mean that is anyway part of the signature, no doubt in that. Apart from that, your signature should clearly identify the name of the auditor, and also it should identify the membership number which is given by the institute. That is the reason why, along with your beautiful signature that you would have practiced from many years, along with that the membership number also has to be affixed, so that clearly an auditor can be identified by the external parties. Now if you're a firm of auditors, anyway your personal signature, personal membership number will be affixed, but along with that you need to also do another one thing. Your firm registration number and firm registration details, I mean name of the firm and firm registration number also should be affixed on the reports, so that clearly everyone can identify that yes, he is an auditor bearing so and so membership number and belonging to a particular firm. Okay, and then comes your auditor's address. Okay, so here auditor's address, uh, this is specifically there to identify that, means who is the engagement partner, and uh, from where he belongs to and where he has signed the audit report. Okay, so he is signing the audit report, sorry, auditor's address means the contact details, and then his residential address. Okay, that details has to be also affixed. And then comes the date of the auditor's report. So date of the auditor's report is nothing but the date on which the auditor is signing the auditor's report, and always remember this date should be not earlier than the director's report. Why? Because see, directors sign the financial statements and directors give all the management representation letter. Now before that you can't sign the financial statements, only it should be signed after that date. Okay, so this should be taken care of. So these are the contents of the auditor's report. Okay, so title, addressee, opinion, base of opinion, key audit matters, other information, responsibilities of the management and those charged with governance, and then responsibilities of the auditors, and then report on other legal and regulatory requirements, and then comes your signature. uh, place means the address and the date. Okay, so these three are called as SPD, space petrol delta, power ranges SPD. ठीक है. So now let us proceed with our further discussion. Now listen carefully. Now listen very carefully. We'll discuss about two things. One is called as unmodified opinion, means auditor's opinion. So auditor's opinion is of two types. One is called as unmodified opinion, and then modified opinion. Unmodified opinion and modified opinion. Unmodified opinion and modified opinion. See, listen carefully here. The concept is very, very important. The concept is very, very important here. Listen carefully. See, unmodified opinion and modified opinion. First, let us discuss about what is an unmodified opinion. Okay, in simple language, it is called as a clear report, clean report. Right? See, if you could recollect the ISA 200, right? So which says that auditor should obtain a reasonable assurance whether financial statements are free from material misstatements due to frauds and errors or not. Which means audit will begin with the intention. See, audit always begins with a positive intention that the financial statements are free from material misstatements. That is the initial intention which the audit starts. Okay, now see, it is not a confirmation that there are no misstatements and everything is good, but this is the mindset with which the audit starts. This is what the difference between an investigation and an auditing. Investigation always starts with a negative mindset that some crime would have been happened and the evidence should prove that the crime has not happened, or it should confirm the crime. But audit, in the other way, it doesn't start with a negative mindset, it starts with a positive mindset that the financial statements are showing true and fair view of the affairs of the company. With that intention we start our audit and we gather the information to confirm that. Now, meanwhile, if there are any misstatements, then we change the opinion. So, sorry. So, unmodified opinion means that the auditor is having an opinion that the financial statements are free from material misstatements. Okay, this is unmodified opinion. Simple language, it is called as clean report. Clean report. Don't write this in the exam. Don't write this in the exam. Always use the word called as unmodified opinion. Okay, so what is unmodified opinion? Unmodified opinion means that the financial statements are free from material misstatements. Financial statements, there are no misstatements, there are no material misstatements, right? We need to consider also materiality. Small mistakes is there which is not impacting the user's decision, then it is okay, fine, ठीक है. But there should not be major or material misstatements. Okay, so in that case auditor expresses an unmodified opinion where he says that no boss, everything is good, everything is good. Okay, your financial state, balance sheet, P&L account, you are complied with laws and regulations, your formats are complying with the accounting standards, you followed all the generally accepted accounting principles, everything is good, ठीक है, सब कुछ ठीक है, right? So such a type of opinion is called as unmodified opinion. Okay, now listen very carefully, mostly this is being targeted in the exam. Compulsory, there will not be any paper without this modified audit reports. Please be very careful with this and you listen carefully. See what happens in case of modified opinion. See, as I already told you that financial statements are free from material misstatements. This is the opinion with which we start our work. But as the audit progresses, you start applying the audit procedures, you start gathering sufficient appropriate audit evidences, and then the initial point that is there in your mind that the financial statements are free from material misstatement may not last till the end. In between, due to the evidences that you have obtained, conclusions that you have reached, this opinion may modify, may change. See, modified is nothing but changed. Modified is nothing but what? Changed. Okay, means now you cannot conclude or you are not agreeing that the financial statements are free from material misstatements, right? That is the conclusion you have reached. How have you reached this conclusion? You would have planned the audit, you would have performed audit procedures, you would have gathered sufficient appropriate audit evidences, you would have reached the conclusions, you would have communicated with the management would have communicated to you. After all these discussions, your mind is saying that no, financial statements are not free from material misstatements. There is some mistake in the financial statements, है ना? So in that case you are going to express a modified opinion. Okay, so listen carefully, in what cases or in which cases you change your opinion, right? So in which case we change our opinion? See, there are only two cases, right? There are only two cases. There are only two cases, boss. The first case is that you have identified misstatements, right? So you have identified misstatements, and then you are saying that no, financial statements are not free from material misstatements. The second one is you don't have evidence, right? See, whenever you are not having evidence, can you conclude that there are misstatements? If you don't have evidence, can you conclude that there are misstatements? The answer is no. Which means the second case is auditor is unable to obtain sufficient appropriate audit evidence. Okay, auditors are unable to obtain sufficient and appropriate audit evidence. So these are the only two cases where the auditor will be expressing what? Will be expressing what? Modified opinion. Okay, will be expressing what? A modified opinion. Now listen carefully. Now coming to this modified opinion, there are three types of modified opinions. Right? There are three types of modified opinions. The first one is called as a qualified opinion, an adverse opinion, and disclaimer of opinion. Okay, modified audit reports are of three types. They are qualified audit report, adverse audit report, and disclaimer of audit report. Right, see, these three are opinions. Now see, opinion can only be one. We are only saying these are three types, but for the same client, for the same financial statement, three opinions cannot be obtained. If it is obtained, it is not called as opinion. Opinion should be only one, isn't it? In that case, either he will express a qualified report, or he will give an adverse report, or he will be giving disclaimer of opinion. Okay, from these three only one will be given. Now how to choose, right, among these three, which report should be given? How will you know? So see, for that you need to remember this. For that you need to remember this. See, first case I told you, whenever there are misstatements, auditor would be changing his opinion. Okay, now see here, the misstatement again depends upon the severity. Okay, there are two cases. The first case is material but not pervasive. Second case is material and pervasive. Okay, okay, so material and pervasive but not pervasive, and material and pervasive. See, listen carefully. The auditor has identified the misstatements. And those misstatements are material but not pervasive. Now what is called as the word pervasive? Pervasive means something big, okay, or affecting multiple accounts, right? So if it is having multiple accounts affect, then don't you think that a higher amount or a bigger amount will be misstated here? Okay, so that is, the word pervasive denotes something which is big. Okay, so first case is there are material misstatements. Okay, auditor has determined the materiality, identified the misstatements, compared with the materiality, and has felt that no, they are material misstatements, but they are not pervasive, which means they are not affecting multiple heads in the financial statements, multiple accounts in the financial statements. Okay, or it is not impacting significant portion of the balance sheet or significant portion of the there's a profit and loss account. So in that case, anyway, your intention is modified, your opinion is modified. In that case, you express a qualified opinion. Okay, you express what? A qualified opinion. Now the second case is you identified misstatements. They are material as well as pervasive. Pervasive means multiple accounts are affected, right? See, for example, say auditor is conducting the cash verification. Okay, so for whenever he is conducting the cash verification, he could not he has identified that there are two bills which are where the amounts has been misstated while entering, some other amounts has been entered. Now in this case, it may be a material misstatement, but due to which the significant portion of balance sheet, significant portion of profit and loss account is not affected. There is a misstatement, there is a mistake, I'm agreeing with that, but there is no pervasive effect. So in that case we say that yes, there is misstatement, but उतना बड़ा misstatement तो नहीं है, not that much big misstatement. So to indicate that severity, we give qualified opinion. Okay, which means auditor has identified the misstatements and those misstatements are material but not pervasive, then auditor would be expressing a qualified opinion. Okay, now the auditor has identified the misstatements and those misstatements are material as well as pervasive, right? Which means they are having a multiple, they are having a very big impact. Or sorry, what happened? Erase kar diya. I have erased it. No problem. We'll change it. So coming back to our discussion, auditor has identified the misstatements and those misstatements are material as well as pervasive. They are material as well as pervasive. In that case, to indicate the severity, see when compared to this, here the severity is much more high. है ना? That is the reason why to indicate that severity, here adverse opinion will be expressed. Okay, so auditor has identified the misstatements and those misstatements are material but not pervasive. Qualified report. Auditor has identified the misstatements, they are material as well as pervasive. Then adverse opinion. This is the first case. Now let us come to the second case. See, second case is a very variety case that auditor doesn't have information at all. In first case, he is saying that big misstatement, small misstatement, something he is saying. Okay, which means he is having sufficient appropriate audit evidence. Second case is a very variety case where the auditor is in a position he did not obtain sufficient appropriate audit evidence. Now see, whenever there is no audit evidence, can you directly say that there is misstatements? No, you can't say. Second case, can you say that there is no completely misstatements? That also you can't say. Why? Because there is a possibility of misstatement. Okay, there can be a misstatement, but there cannot be a misstatement. For that you don't have evidence. Right? So in that case, auditor is telling the shareholders that, boss, I am unable to obtain sufficient appropriate audit evidence regarding some matters. Okay, so it may be cash, or it may be some bank transactions, or it may be about some sales transactions, it may be about some purchase transactions. It doesn't have the information and is saying that, see, I don't have information, but if there is a misstatement, if there is a misstatement, okay, why? Because he's not having audit evidence, he cannot conclude that whether there is a misstatement or there is no misstatement. But he's saying that if there is a misstatement, then that misstatement would be material but not pervasive. Right? If there is no misstatement, you are happy and I am happy. But if there is a misstatement, then the possibility that it may be material but not pervasive. Right? To indicate this, auditor would be giving a qualified opinion. And the second case, auditor is saying that, see, I don't have information about many accounts. Right? If there is a misstatement in those accounts, it will be material as well as pervasive. Right? It is material, matlab amount is very big, as well as it is impacting multiple accounts or significant part of balance sheet, significant part of profit and loss account. There is a possibility of being affected. Understood? To indicate this severity, he will be giving a disclaimer of opinion. He would be expressing disclaimer of opinion. So this is very, very important from the exam point of view. There won't be any question paper without asking these modifications. You should be very, very clear with this. And the wordings are very, very important. Do not write this on your own layman language. You will not be given any marks. Right? Always students come and say me that, sir, I have written it but I did not get the marks. See, listen, my dear students, please do not write in your own words. These are the technical words that should be written as it is from the textbook. Right? Or please use the language or close to the language that I am using related to these issues. Okay, so the auditor has identified the misstatements and they are material but not pervasive. He will express a qualified opinion. The auditor has identified the misstatements which are material as well as pervasive. Adverse opinion is expressed. And if the auditor is unable to obtain sufficient appropriate audit evidence whose possibility of misstatements, listen my words, okay, whose possibility of misstatements is material but not pervasive, qualified report, whose possibilities of misstatements is material and pervasive, give disclaimer of opinion. Very, very important. Please keep this in your mind. Okay, I guess if you would be having a chart here somewhere, Not there, chart is not there. It is there in the BBP textbook. Okay. So you do one thing, you just remember this and see anywhere you get the doubt that sir what maybe the answer means what type of opinion is to be expressed in your question paper, you just with a pencil you just make this. Okay, you just make this. Okay, qualified adverse disclaimer QQAD. Okay, QQAD. You remember like this QQAD. Right, so if they ask about qualified opinion you can write these two instances. Okay, again don't tell me sir here you have not written anything, should we also not write anything? See, this chart is only for our understanding, you should never write the chart in the exam. Okay, why? Because you are not BCom students or you are not intermediate students, you are professional students, so you need not write this chart. This should be written in wordings. This is only there for to make you remember. Okay, to make you remember, to make you remember only we are using this. Okay, so you will never go wrong in the exam, you just remember these two cases and then QQAD, you just do this. So if they ask about qualified opinion, write these two, adverse and disclaimer, write these two enough. This will be used in your MCQs. In the multiple choice questions you have always a confusion that sir what type of report, what type of report, what type of report. This will give you clarity. Okay. Good. Now we have discussed about all this. We have discussed about all this. Okay. See here I am telling about unmodified reports, right? Unmodified report means financial statements are free from material misstatements, right? Now what we call the financial statements are free from material misstatements. As I told you that they are prepared in accordance with the IFRS means, and they have prepared as per the generally accepted accounting principles. They have complied with the laws and regulations. All assets has been recorded, all liabilities has been recorded, there are no omissions, and the framework is in accordance with the laws and regulations of the country. Okay, that is what called as, see, financial statements are adequate, disclose the significant accounting policies selected are applied consistently, accounting estimates made by the management are reasonable, and information is relevant, reliable and comparable and understandable, and financial statements provide adequate disclosures to enable the user for understanding, and the terminology used is appropriate. So these points you should compulsorily remember and reproduce in the exam. Okay, if they ask about unmodified, I don't think that unmodified would be asked. Okay, very less important, very less important. Why? Because primary concentration will be there on the modified reports. Okay. Okay, so next, see here there are some contents, you need not remember these contents, you just know the meanings of this, it would be enough. Okay, see other information I already told you the meaning of this. Okay, other information just know the meaning, just know the meaning, you need not by heart all this, you need not by heart all this. Okay, so you need not by heart all this, but know the meaning. Other information means what I already told you, annual report, annual report. Okay, so in the annual report you have a lot of data, there will be chairman's report, there will be director's responsibility statement, there will be CSR statement, there will be corporate governance statements, there will be cost audit report, there will be statutory audit report, big report. Annual report is a very big report. Okay, now what is the auditor's responsibility is in that big report along with the audit report. See, in this annual report you have audit report, financial statements plus other information. Okay, so ISA 720 discusses about what is the responsibility of the auditor about this other information. Okay, have you all understood this? About this other information, what is the auditor's responsibility? See, this other information is not prepared by auditor, point number one. Second point is prepared by management and those charged with governance. Third point is auditor is not appointed to audit that information. Auditor is appointed to audit only what? Financial statements, not the other information. But auditor need to identify the inconsistencies. Which means in financial statements, in balance sheet, let us say some figures are used. Okay, in balance sheet some figures are used. Now auditor will audit this, but other information somewhere they have, let us say, fixed assets 100 crores, but somewhere other information they have used 100 crores, which means financial statements are inconsistent with other information. Okay, now let us say fixed assets are 100 crores, but somewhere in the other information in the assets they have mentioned it as 90 crores, which means there is a mistake. So other information is not inconsistent with the balance sheet and profit and loss account which auditor has audited. In that case only auditor will get the responsibility to report over it, isn't it? He will tell that yes, somewhere they have used different figures, but auditor will not audit that. Remember this. Auditor only will read the other information. That too if the management provides in time. Okay. So that is a responsibility of the auditor. So I would say that just remember this. So remember this. So auditor identifies the information, identify the other information obtained by the auditor prior to the date of auditor's report. Okay, and state that auditor has not conducting any audit of other information. I told you that auditor is not responsible for conducting any audit of other information. Okay, and please include this in the auditor's responsibility report as well. See, auditor's responsibility paragraph is there now. Please include that. That is not the auditor's responsibility. Okay, and then also state that auditor has nothing to report. State either the auditor has nothing to report or provide a description on the material misstatements if applicable. If there are material misstatements, auditor is not responsible for that, right? He will only say that there are inconsistencies. Okay, have you all understood these points? Next, see, this part is again important. 720, this part is important. This part is important. Okay, so auditors need to perform the procedures only to evaluate the inconsistencies. Okay, and once you identified the inconsistencies, you tell the management and ask the management to take relevant action on that. Okay, if the management refuses to make any corrections, then communicate to those charged with governance. See, I would have told you in the starting classes about the difference between those charged with governance and the management. Okay, and even after telling the management if they are uncorrected, in that case auditor need to state that information in the auditor's report. Okay, alternatively you can also reassess the management integrity and you can withdraw from the audit engagement if possible, right? Which means if the management is not agreeing to change the other information, then what they would have done with your financial statements, you start reassessing it. Okay, if possible you try to withdraw if the laws and regulations are allowing. If the auditor is not, if the laws and regulations are not allowing, then the auditor will continue with the audit by just putting that effect on the auditor's report. So as I told you that to tell this information, right, in the auditor's contents we have read this part. Where is that? See this part. If the auditor identifies any inconsistency, he will tell this information here. Okay. Okay, so this is all about our revision up to ISA 720. Okay, so coming to the auditor's report, so he can include that in the auditor's report under the heading other information. Okay, and this should be what, below the key audit matters section. See, in our regular classes I would have told you that the contents that we have discussed now, that should be there in the same format. Okay, you can't change up and down. Okay, so this is what the discussion up to ISS 720. Okay, so in our next video we'll be discussing about our key audit matters. Till then, have a nice time, and you have any doubts, please put a comment in my channel. Okay, so have a nice time. If please do subscribe and let us continue. So wait for my second video over this audit reporting revision. Thank you.